For months, the narrative has been that the San Francisco real estate market is ice cold. But is that all about to change? Coming up on the Silicon Valley Snapshot. This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another Silicon Valley Market Snapshot for the third week here in November 2020. Election seems to be a long time ago, yet it was only a week and a half ago, and things are still starting to shape up, and we're still starting to see the after effects. We're still seeing the after effects, rather, of the election, but we're not going to really delve too far into that. Wait a few more weeks and see how everything pans out and see what the after effects really are, into December and the beginning of 2021. But for the time being, if you are a home buyer in today's market and you are looking for a data set very comparable to what we're going to be sharing with you today, go ahead and text the word data plus the zip code, area, or neighborhood that you're looking in so that we can get you a comprehensive data set for the areas that you're looking in. And if you're a home seller in today's market and you're looking for the most accurate, up-to-date pricing information to help you make the most educated decision possible, go ahead and text the word data plus your property address to the number down below, and we will get you a much more robust set of data than what you're seeing even here on today's video. So anyways, everyone, let's get into the numbers. Let's get into the data. And really what I wanted to go over today was absorption rate. So absorption rate, for those that are new to the channel or maybe haven't seen as many of these as others, absorption rate measures the amount of inventory being absorbed every single month. For example, if you have 100 homes on the market and you have 100 homes pending, right, then the pending absorption rate would be 100%, right? Now, if you have 90 homes pending, then it's 90%. Now, if you have 110 homes pending and 100 homes on the market, then you have an absorption rate of 110%. Now, in terms of statistical interpretation of a buyer versus a seller's market, anything above a 33% absorption rate is actually considered a seller's market. Anything below a 16% absorption rate is considered a buyer's market. And so that is actually where we primarily see that term stem from, is the absorption rate, the measure of the amount of inventory being absorbed month over month. And you can measure it either through closed sales, right, or through pending sales. And I prefer to actually monitor pending sales because it gives you a more real-time idea as to like how much inventory is being absorbed in the now, as opposed to sold data, which is usually 21 to 45 days behind the pending data. Now, homes do fall out of contract, which means that the pending data maybe isn't the most accurate, but it does give us a better idea of the velocity of the market, in my humble opinion. But anyways, without delving too far into the weeds, for today, I wanted to look at the pending absorption rate because it's really interesting to see how I would have expected leading into the election, right, and post-election, for us to experience a little bit of a hangover, right? And leading up to the election, maybe a little bit of just buyers maybe not being 100% all in because of that fear, because of that uncertainty, and everything that comes with an election, right? Regardless of who wins, right? The reality is that people are going to be upset, they're going to be skittish, they're going to be nervous, they're going to be this or that, right? And so we typically see a slowdown. But if you look at this month's absorption rate, or if you look at October's absorption rate, you'll notice that the pending sale absorption rate in almost every single county was up month over month. So if you look here, first, the Santa Clara numbers, we have, if you look at that absorption rate graph, 96.7% absorption rate. That is absurdly high. That's nearly every home that's coming on the market is being absorbed, right? Almost instantaneously. That is up from the previous month of 92.8%. So we're seeing an increase, right? Not just in closed sales, we're talking pending sales, which is more real time. So buyers were making buying decisions leading up into the election. And if you watch last week's video, we covered almost the same information last week, but we're looking at it at a slightly different angle. When we look at San Mateo County, a slightly more nominal increase from 71.5 to 72.8% absorption rate, still an incredibly strong and healthy seller's market. Then we start to move into the San Francisco market, which we're going to focus the majority of our time. Or sorry, before we move into San Francisco, let's look at San Benito. San Benito County, 109%. So this is one of the only counties where you see a dip. But for so many months leading up into September, you see this huge surge in pending sales, 163% absorption rate in September. Yeah, it dipped, but it's still well over 100%, which is an incredibly strong and healthy seller's market. So yes, a slowdown, but a slowdown relative to a peak, an all-time high for that county. Now, when you move into San Francisco, this is where things start to get interesting, right? Even in San Francisco, we experienced an uptick in pending sales and an uptick in the absorption rate month over month from 32.4 to 36.7%. Now, we're gonna revisit San Francisco in a second, so stay tuned for that. Now, when you look at Contra Costa County, 127.7% all the way up to 138.5%. My team actively right now making offers in Contra Costa County. And it's amazing to see just how aggressive that market continues to be month over month. You look at that absorption rate graph from that all-time low of shelter in place. We've experienced growth practically every month with a slight dip there in August, September, but I mean a nominal dip and then a huge increase up almost 10 points in October. And then we look at Alameda County, and again, a fairly modest increase, but an increase nevertheless from September of 116% absorption rate to 120. Guys, look at this. Oh, in three counties in the San Francisco Bay Area, over 100% absorption rate, and in Santa Clara County, not too far behind at like 96.7%. That's absurd, and these are numbers that if you had told economists back in April that we would be experiencing these kinds of numbers, I think all of them would have called you crazy, because we were seeing projections heading into the rest of the year of nominal increases, or for most people, most economists thinking that the market was going to drop, even if it was just a little bit, it was still a drop. And so to experience this kind of growth, this kind of massive growth, is honestly, it begs the question, well, how long is this going to last? And that is the question that's on everyone's mind. If you search on Google, one of the top hits on Google right now is, will the housing market crash in 2021? Lots of people asking that question. And the reality is we don't know, right? Like there's no crystal ball. But what you're seeing right here is the perfect storm of low inventory levels and high levels of demand, really primarily driven by interest rates. And honestly, I do feel that a lot of this economy is being propped up by the stimulus, right? And so there is that, that kind of like drunk monkey in the back of your mind that must be saying, well, at some point, that well's going to run dry, right? But at the same time, when you look at Silicon Valley, and this is something that I've preached over and over again in a lot of the Silicon Valley snapshots, is that Silicon Valley is driven by the tech industry. The vast majority of those jobs remain unaffected by COVID, right? In terms of job security. Now, yeah, work from home and everything, which is why we're seeing a lot of movement into the East Bay, right? And a lot of movement into the South Bay, San Benito County, South Santa Clara County, et cetera. But the vast majority of the tech industry remains unaffected, right? And some of these tech companies, frankly, they benefited from COVID and from shelter in place. And so as long as tech continues to remain healthy and continues to thrive, so will the Silicon Valley real estate market. Now, coming back to San Francisco, because a few months ago I made a video and frankly, it performed very well. and the reason it performed very well is because I believe that there are a lot of people who are curious about the long-term effects of COVID on the San Francisco real estate market. I, for one, remain bullish on San Francisco long-term. Obviously, in the short term, what we're seeing right now is the condo market primarily bringing down, really bringing down the overall appearance of the strength of the San Francisco real estate market. If you look at the absorption rate, again, you look at this graph here in San Francisco, you'll see that we had a 36.7% absorption rate in the month of October. But when you look at just the condo sector in San Francisco, it's at 27.4% now absorption rate, which is actually not even a buyer's market. It's actually considered a neutral market. Problem is that we experience everything relative to we judge everything based on what we know, right? And we've never seen a market like this in San Francisco. And so, relatively speaking, it is also worth noting that right now in San Francisco, the single family sector still remains a seller's market. In looking at the data, and also my team is writing offers right now on single family homes in San Francisco. And when you look at that, and what we're experiencing in real time is like, you expect the market to be soft right now, but we're still going up against multiple offers, almost every single offer that we're writing. And so you see this right now, 65.7% absorption rate. That is a healthy seller's market. That's not even close to being neutral, right? I mean, we're almost at double the amount of transactions being done right now than what would be considered a typical neutral market even. So, that is definitely still a strong sector in San Francisco. And again, this comes back to that flight to more space, right? There's a lot of folks right now in San Francisco that they're work from home, so they're going to naturally flock to more space, whether that be somewhere else in the Bay Area, right? Or a single family home in San Francisco. And a lot of the condos right now, they're the ones suffering, right? The condo sellers right now are the ones who are primarily suffering in San Francisco. But truthfully, if San Francisco can weather this storm, it can weather anything, right? I don't know what's going to happen, right? But I have a funny feeling that this market's gonna pull out of this within the next 12 months or so. So if there's ever an opportunity to be a buyer right now, go to San Francisco, and if you can, buy a condo or two, because I believe that we'll see an increase in I do believe that we'll see an increase in absorption rate into seller territory within the next 12 months or so. Now, and especially if work from home starts to be lifted, or some companies really start going back into the workplace, which who knows if that's going to happen. Obviously, right now we just got moved into that different purple zone, right? So who knows, right, everyone? But I still, like, based on this information, I have to say that I don't see any red warning flags that are signaling like this market is going to implode, right? And again, if San Francisco can weather this storm, it can weather just about anything.
You own a home, but you want to buy a new one. But before you can do that, you need to sell your current home. The Selling Silicon Valley Group makes it easy. We will get you an all-cash offer for your current home to take it off your hands, and give you the money to buy your new home. You move when you're ready. We don't really need your house, so we'll put it on the market and work to sell it for full market value at the highest possible price. The best part is, if and when the home sells for more than what we paid you, we send you a check with the difference. You can get the full market value of your old home, and you get to move into your dream home on your schedule by yourself, without the hassle, with the Selling Silicon Valley Group's exclusive trade-in program.
That's it. That's all, everyone. If you have any comments or questions about anything that we've discussed today, go ahead and leave your comments down below. I'd love to engage with some of you and what you think is going to happen, not just in San Francisco, but all over the Bay Area. And I always know that there's those naysayers out there that are just like, the market's going to crash, the market's going to crash, the market's going to crash. Perfect. I would love to hear your reasoning as to why the market is going to crash. What is going to change? Is there going to be a drastic increase in inventory, right? Or is it going to be a drastic decrease in demand? Which one will it be? Because one of those two things needs to happen in order for something to change. And until then, the San Francisco real estate market and the Bay Area real estate market is A-OK. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I will catch all of you in the next video.